Good evening, Bob. How's everybody doing tonight? We'll give a couple minutes to let a couple more people in. See, we already started to get a bunch of people starting to log in. Hope everybody's staying busy, keeping up with the market. A whole bunch is going on right now. Talk a lot about it, especially in the rental market. And first and foremost, we're going to discuss, our topics for tonight is going to go over the programs, submissions, how to go through with the process, how to win some deals, tools that are available to you, and how to sign up with us at Express Capital. I do want to be as interactive as possible. So please do post questions in the chat box, raise your hand if you have a question that needs more elaboration, or use the Q&A box, whatever makes the most sense or easiest for you to use. We can do them all. We'll wait another minute or two. Okay, let's get started. So let me just share my screen real quick. So the first thing we're going to start off with is programs that we offer here at Express Capital Financing, how they work, what we are willing to take, what our appetite is, if you want to call it. So let's start off first with our overview page. Actually, we'll go through straight into it. So our first product that we're going to discuss tonight is our fix and flip loan program, which is used for short-term projects, such specifically fix and flips. A lot of people use it also in the burst strategy, which is used to purchase a property, rent it, get it prepared to stabilize the property, go ahead and refinance it for its full value, the future value, if you want to say. And then we could go ahead and hold that property and let it cash flow. So a few quick things that we'll cover with this program is that it is a nationwide program. So any city, any state. The one thing that I would say about the any city, any state is that we aren't so happy with rural properties. We are open to them to some extent, usually if they have close comps. So if it's a rural location, you can pass it by us for a yay or nay. But generally, any major city is definitely okay. Anything that's considered suburban is fine. We can work with that. It is a no prepayment penalty, right? So we understand that investors are going to be in these deals for a short period of time. Usually, the faster they get in and out, the more profitable they are. They do not have to worry about any prepayment penalties. They only use what they pay for. It is a high leverage program, right? So that means that we'll go up to 90% of the purchase price and 100% of the renovations. Now, our LTV is usually based off of experience and the deal, depending on how heavy the renovations are, how experienced the investor is. So generally, we would be anywhere between 75% and 90% of the purchase price and 100% of the renovations. If they've done 5+ flips, they qualify for 90. 3+, they're usually at the 85. Anything below that, newbies to 2 properties, I would say anywhere between 75 and 80. There are other factors that can come into play, right? So we are common sense lenders. So if the borrower has a license, if the borrower has done a project that was, much greater than the one that he's looking at now, we can always look to adjust those numbers based on common sense underwriting. Now, we'll lend up to 75% of the future value, right? So all these numbers are coming into play based off of the all these numbers are coming to play, meaning that if the ARV, let's just say percentage is 80% at the 90 and 100, we would have to adjust that down, right? If the 90 and 100 is 65 of the ARV, it doesn't mean we can go higher than 90 to hit 75, right? So it's always going to be the lesser of the two numbers. There is no monthly minimums. We do not lock our investors in for minimum amounts of interest payments. That's another form of a prepayment penalty that you might see on some fix and flip loans. We do not do that. We offer unlimited draws, so there's no schedule that they have to hold to. It's all based off of their schedule, their contractors, and how they work. There is a draw fee for it. It's about $250 for the inspector to come by there and the wire, and that can be included into their scope of work, right? So if it's going to cost them $10,000 to complete the kitchen, they can make it $10,250 to include that draw fee, so it doesn't have to come out of pocket. We don't have any junk fees, no application fees. Our rates start right now at 7.5% up to 10%, again, depending on the deal, the numbers, location of the deal. And one of the greatest things that we do offer is back office support, right? So the biggest thing, at least in my experience, when it comes to putting a deal together, it's how well the communication is, right? Who's speaking to who? Is there a loan officer involved? Is there a processor that's communicating? How often are they communicating? And that's where we stand out, right? So you'll have a follow-up call with your loan officer every single week, just checking in, letting you know what's going on, keeping you up to date with the file, as well as you'll have our processors that'll be communicating with you thoroughly throughout the entire process, helping you put together documents that, if you need help with them, whether it's putting together a LLC, sometimes those are waited to last minute. We can assist you with that, whether it's communicating with the insurance agent and making sure that we have the proper coverage. Our processors will cover that from start to finish. All of our loans are written with a 12-month term, which means that a lot of the times I've noticed where you'll get a better rate, but it's based off of a 10-month term. And that actually is a greater rate than it shows, right? Because it's all based off of how long it's amortized over. All of our loans are going to be 12 months. We offer a free 3-month extension. So if there's more time needed, whether it be the market, they couldn't get the seller right, a buyer right away, we will offer a 3-month extension for free. There is also another 3-month extension that they can get for a 1% fee. And we also offer certainty of execution. Now, certainty of execution is something that is more based off of how we start the deal than it is how we close the deal, right? That's with the loan officer taking their time and making sure that we're communicating all the information, making sure that everything fits our underwriting guidelines so that there won't be any changes to the deal. And that's something that we take very seriously. We make sure to go through as much information up front as possible so that none of our deals have to change, whether it be leverage, whether it be rate, or anything of that nature. We do offer free proof of funds to all of our investors. We do not charge for it like some other companies might. And we offer also a 0-point program where experienced investors can actually defer their points to the end at the time of the sale of the property. So this way, it just helps with the cash to close, lowering that, giving them more liquidity so that they can diversify themselves and put it into more projects and have more abilities to make a higher cash on cash return. Another really key point is when it comes to the renovation money, investors are not paying interest on the rehab portion of the loan until they start to draw upon it. And as they draw upon it, it grows. So it's treated like a line of credit, right? So if I have a $100,000 line of credit to use to renovate my property, and at the end of the deal, I only used 80,000 of it, my interest payments would only be based off the 80,000, and my principal payment at the end of the term, once I'm ready to pay it off, would only be on the 80,000, not on the full 100,000. But that's a really key point, which will save your clients more than 50% of the monthly payments, especially on the heavy renovation deals. When they have 150, 200K in renovation, that's a large payment that they're saving every single month by having the as dispersed payment, as opposed to Dutch or full boat, as some of you might call it. When it comes to the appraisal process, we have a lot of different options, whether it be an auction property with no access. We can do drive-by appraisals as long as we have interior photos. In some markets, it is actually faster to do desktop appraisals where we'll have Somebody go out to the property just to take measurements and photos, passing it back along to the appraiser, who could then do it from his desk, which is allowing him to do more appraisals in a quicker amount of time. And some markets, it's just best and fastest to get a regular appraisal, especially New York, New Jersey, where we have, in Pennsylvania, the East Coast, where we have local appraisers which we can reach out to, and they get them back to us within a few days. We offer an unlimited line of credit. Now, this is all based off the borrower's ability to come up with down payment, right? So as long as they have the down payment to fund the deal, we are never going to stop them from doing more deals. Whether they have 10, 20, 50, or 100 properties on our books, they are never going to get a call from our asset manager telling them, hey, you have to pay off this deal before we go ahead and fund the next one. So that's another great value add that we offer. That'll help out your investors and helping them really. The whole key with this, and when it comes to fix and flip specifically also, is the ability to do more deals and consistently do more deals. And that's where we feel we can strongly help our borrowers. We also offer ground up construction, which is very similar to the fix and flip product, except that it's for ground up construction deals. So slightly different. One more thing actually that I want to mention about fix and flip, by the way, is that there are a lot of lenders out there that'll offer 90 LTV, let's say, with a 90 loan to cost cap. It is almost impossible to offer 90 loan to value with a 90 loan to cost cap, because the minute you add $1 or $2 of renovation funds, that percentage number now increases past the 90% loan to cost. So we are actually very open to doing above 90 loan to cost. Depending on how high that goes, we'll usually be at 92, 93 is for most of our deals. The heavy renovations, lopsided deals where the construction value is greater than the equal to or greater than the purchase price, we may cap those at the 90 loan to cost. Now, when it comes to ground up construction, like I said, it's a very similar program, no prepayment penalties, 12-month term, high leverage. Now, we'll do up to 85% of the project cost. So that's loan to cost. So instead of 90, we're capping this at 85. We'll go up to 75% of the future value. And we'll go up to 75% of the purchase and 100% of the development. Now, it all depends on the deal, right? And where the location is. For example, some locations you'll find where people are buying the land for 20, 30K and building the property for 200, 250K. In those scenarios, more often than not, they're usually putting down more money than that. They're buying the lot of some nature because they have to have that 15% of the project cost in the deal. Whereas in some areas, let's say like New York, where to buy a piece of land, you're not getting it for cheaper than a couple of 100K. Those deals are where they'll get that high leverage of 75%, and you get 100% of the renovation cost as well. All of our loans are 100K minimum. In this specific program, fix and flip, ground up construction, we max it out at 2 to 3 million. We will exceed those for certain markets. So depending on where they are, if the property values make sense and it's common that they are that expensive where they're not considered a luxury or unicorn property, we'll usually do like a quick liquidity report just to see if the market will bear that type of property. And if it will, we can make adjustments, and as long as it makes sense, we can get those done. We can offer negotiate release prices on multi-asset projects, right? So if you're building a couple of homes in one shot, we can structure a release price per property so that this way you have the ability to sell properties in the interim and not have to have all of them done and sell them in one shot, obviously. So we want to make that process nice and easy for the investors to work through. Our minimum experience for ground up construction is 2+ deals. Again, we do absolutely need some experience when it comes to ground up construction. We have made exceptions in the past, whether the investors have really strong fix and flip experience where they've done some really strong gut renovations, and a lot of them, we would ask that we send the track record first and give them a pre-approval based off of it. But we do need at least 2 deals experience in the ground up space just to make sure that, again, it is a very different animal than fix and flip. So that's why we're only make those exceptions when there is a very strong level of experience from the borrower in that space. We only will do ground up construction for multifamily, single families, townhomes type of projects. So we're not going to be a good fit for, let's say, commercial office space construction, things of that nature. We generally want to stay in the residential space. What we ask for is a summary of experience, a personal financial statement from the borrower, And then on the project, we're looking for a quick summary of what they're looking to accomplish, what their exit strategy is, whether we're going to hold this property as a rental or sell this to the market. Plans and drawings, if the property already has plans and permits, that's where they'll get the high leverage. If they do not have plans and permits, we would cap that at 50% loan to value on the purchase and still 100% of the development cost. We need a detailed budget, the hard cost, soft cost. We will cover soft cost. We will not cover infrastructure or horizontal, as some people call it. We're only looking to cover labor, materials. We could cover plans and permit costs, but we will not do utilities, infrastructure, electricity, electric, and things like that. We do want to see a P&L just to understand the profitability of the deal and the proposed timeline of how soon and how and they would be asking for each part of the process, so we understand the borrower's deal and can be prepared to offer the draws as necessary. There are times where people will ask, hey, can I use my contractor as a partner on the deal in order to get the deal financed? The answer is, if the contractor is willing to sign on the loan docs and be a part of the deal, we can. However, the contractor would still have to show proper experience in the deals in the ground up construction. More often than not, we're looking for them to show us that they've actually developed properties that they held title for. If they have documentation showing that they've built properties in the past for some of their clients, and we can request those documents, look at them, and on a case by case, we can give a yay or a nay. And by the way, guys, like I mentioned, if you have any questions, please do put it in the chat, put it in the Q&A, or raise your hand. I'd be happy to answer them. If I'm going too fast for anybody, please just let me know. The next program I'm going to go into is going to be the multifamily mixed use bridge, right? So this is specifically for multifamily and mixed use properties. These are not for the other commercials. That would be your large balance commercial. Okay. So now when it comes to the multifamily space, we want to be at a minimum of 500,000 for a bridge. And this is, like I said, good for multifamily and mixed use properties. Now, as far as loan to values, we will go up to 80% of the purchase. We'll go up to 75% of the after repaired value with a cap of 85% loan to cost. And if we're doing, let's say, a cash out refinance bridge and we don't want permanent because we're exiting the loan, pretty soon, or maybe we're going to sell the property, we could do a 70% cash out refinance, and we offer 100% of the rehab or capital expenditures. Now, when it comes to multifamily bridge, we know that sometimes, more often than not, it might take longer than 12 months. So we do offer terms between 12 and 36 months. Again, there is no prepayment penalty whatsoever. And our rates for our mixed use multifamily will start at 6.99%. This is also interest only. Again, very similar to our fix and flip program and how that works as far as draws and all that. And so it's keeping the payments low and allowing the investor to get in and out of the deal as quickly as possible. Now, when it comes to the multifamily mixed use, we do want to see that they've had experience doing something in the multifamily space. So we should talk about it in a way of graduating from step by step, right? So for example, if as an investor, I'm familiar, I've done, fix and flips in the 1 to 4 space, and now I want to get into a multifamily and I found a 6 family, that is okay, right? So we want to go from, let's say, 4 units to 7 units, from 7 units to 12 or 15 units, and then from 15 to 30. Right, so we can grow and graduate. We don't have to have the exact amount of units to get to that spot, but we do have to have some experience to get into a multifamily deal. We don't do newbies, so if this is their first deal, it should not be a multifamily, and that's what I advise to every investor in making sure that they're profitable, because there are going to be a lot of learning curves that they should learn first in the 1 to 4 space before they get into the multifamily space. As I mentioned, we have a nationwide footprint for this. There is some minimum interest when it comes to the multifamily deals. So usually it's going to be about 6 months. We do have flexibility on that depending on the deal. And we will work with investors with a 650 score or higher. Now, keep in mind, for all of our bridge programs, we are not credit sensitive. The credit does matter, but it's not credit sensitive. Usually if their credit is not the greatest, but they have a lot of experience and they're able to, and we know that they have the ability to follow through on the deal, but maybe they're not the greatest at managing their finances or making payments. That's okay. The way we'll mitigate that usually is by including an interest reserve, which will hold the payments in the deal in escrow, and we'll make those payments for them month by month. Whether it be, depending on how bad the credit is, it might be 3, 6, 9, or 12 months of interest that we'll hold for them until that it runs out. Then they'll start making their own payments. And the last bridge product that we have would be our large balance commercial, right? So any type of real estate that we're working on, we should have a program for you guys, whether it be commercial, residential, whether it be permanent or bridge, we have something that can help. So for our large balance commercial, this is for your office spaces. This is for your, here we go, multifamily covered already. So retail, your office buildings, industrial properties, warehouses, self-storage, even skilled and assisted living and strip centers is going to fit into your large balance commercial. So again, our minimum loan amount for commercial is going to stay at $500K. We're looking up to a 3-year term, again, interest only, very similar to the multifamily fix and flip. The only difference now is going to be on our stabilized values. We'll go up to 70% for, let's say, your warehouses and tier 2 type assets. And we would be at 60% for your special use assets, which would be more of like your assisted livings, strip centers, and retail. When it comes to liquidity and net worth, that is important for the large balance commercial. So we generally want to have a net worth similar size of the loan amount and about 15% of the loan amount liquidity, so that we have the means to make payments and keep and follow through with the deal. Now we're going to get into the Rental 360 program, which is our debt service coverage ratio loans, as some people know it, DSCR. Some people know it as Lite-Doc, mortgages. It is a 30-year amortizing loan with a fixed rate. We do have options to do ARMs, but we'll talk about the 30-year fixed because that's our most popular right now. Now, keep in mind right now, the entire market right now is moving around a lot when it comes to rates. There's a lot of new information. The Federal Reserve, even though we don't borrow from the Federal Reserve, there's always a indirect chain of how that affects us. So we will see rates continue to rise. We're expecting it to be so for the next year or two. So keep your eyes out. These are deals right now where we were spoiled for the last 2 years with rates in the 4%. Now they're coming back a little bit more to normal where they're in their 5s. They are still very competitive. They still work. And we're going to see, obviously, that investors are going to get cheaper prices on their property as rates rise. So that'll mitigate the increase in rates that we're seeing in our market. So top 3 reasons why people would use this program is it does not require tax returns, W-2s, or any type of income verification. We do not look at the borrower's debt to income ratio, and it is a very competitive solution for your Fannie Mae fallouts. Additionally, it is a very much easier process. It's all based off the asset. It does not get reported to their credit bureaus, right? So it's not going to affect my DTI. It's not going to change. If I want to go buy my own primary residence after I've just, bought a DSCR, use the DSCR loan for my rental property, it's not going to affect me that way. Now, our loan sizes are 100,000 to 2 million. We go up to 80% of the purchase price. We actually now just released that we're going up to 85% of the purchase price if you have a 720 score or higher. And we go up to 75% for cash out refinances. Now, this program is a lot more credit sensitive than our bridge programs. So their credit is going to dictate the LTV that they qualify for, as well as the rate that they qualify for. Now, we have multiple options for them in this program, so that there will be either, hey, I could still go to a higher leverage and pay a little bit of a higher rate, or I could keep my rate low and just put down a little bit more cash on the deal. So we offer 30-year fixed, we offer 5, 7, and 10-year ARMs, and we can also do interest only. Interest only is usually used more often than not when there is maybe I'm taking over a property that is not rented at its fullest capacity. I don't want to do a bridge. It's still debt services with interest only. and then it'll convert into a 25-year arm. So that means that my rate could adjust based on the market, but at least I know that I have a full 25-year amortizing loan, and I don't have to worry about a balloon payment of any sort. We will do for this Rental 360 program, it qualifies 1 to 4 units. Rates right now are, like I said, are more in the 5s. This is being changed. We got spoiled a little bit in the 4s, but they are starting to creep up. We do purchases, rate and term refinances. We could do cash out refinance up to 75%. Now, the requirements for this is based off of the property mostly. And the only thing that the borrower really brings to the table is their credit score. And they do have to have either a primary residence or an investment property. If they do not own a primary, they can hire a property manager. And our fear there is just to make sure that the borrowers are not moving into the property. And if they do not own an investment property, we can still get it done. We would just give a 5% haircut on the loan to value, being it that it is their first project. We have the ability to close these loans in 30 days. That's mostly due to the borrower and their ability to send in the docs. The docs are very simple. It's usually the leases, the entity documents, the purchase contract, a PFS, and an SREO is mostly what we're looking for. The rest of the docs will come from title or attorneys or and other parties associated with the file. Again, we look for general urban, suburban locations and primary, secondary markets. When it comes to rural, if there's 2 ways to look at it. We will do some rural properties at a low loan to value, figure 60, 65%. What we're looking for is 2 things. It's the appraisal, how he's going to mark it off, whether it's rural or whether it's suburban. And the second thing is how far the comps that the appraiser is using. If the appraiser marks it off as suburban, but the nearest comp is 10 miles away, that could be considered as a rural property where the loan to value could get cut down. If it's the opposite, let's say there are close comps, but it's rural, we can look to actually close that loan, even though it's marked off as rural. All of our loans close in a entity, which means that they have to have a corporation or an LLC set up that they're planning to use. And our minimum credit score for this program is actually going to be a 620. And that just got reduced as well. Now, for the deals that don't debt service well, they have issues, we can offer a no DSCR option with 75% LTV at a slightly higher rate. And for more information on that, again, you can always send us the deal and we could advise on it. Prepayment penalties, there are for the Rental 360 program. So there's multiple options. We have a 0 prepay option for a slightly higher rate. We have a 3-2-1, which is a step down, which as you see here, it's 3% the first year, 2% the second year, and then 1% in the third year. And then for a better rate, they could do a 5-year step down, which would be 5, 4, 3, 2, and then 1. So they have the options. They can structure the deal the way that works best for them. The next program we're going to cover is the Lite-Doc commercial program, which is the Rental 360 version of the commercial properties, right? So when it comes to the commercial assets, there's a lot more options. It really depends. There's a lot more moving parts, who the tenants are, what kind of property it is, that can change terms and things of that nature. So we go up again as low as $100,000. Our sweet spot is going to be the 500K plus when it comes to commercial. Those are going to get the best terms available and qualify for our best programs. Very similarly, we offer 5, 7, 10, 15, or 30-year terms, and we can do amortizations of 25, 15, 25, and 30. We can go up to 80% LTV, and we can go up to 75% on cash outs. Now, that does depend on the asset type, what kind of commercial property it is. Usually 80% LTV is going to be for your multifamily mixed use properties. Retail, things of that nature will usually be at 75. If the loan amount is high enough, we can still do 80%. So there's always options available. We do not require tax returns, W-2s, income verification of any sort. The only time we will ask for tax returns or bank statements is if it is majority operated by the owner. So if it's an owner-occupied commercial property, they run their business out of it, we will ask them for their tax returns or bank statements. It's either or. Obviously, tax returns will get you a better rate than the bank statements. We will cover out-of-state investors, and our rates for commercial mortgages are going to start at 5% plus. We work at the credit minimum of 650, and we can close these loans as well in as quick as 4 weeks. So again, you can see here on our website, we have a large variety of different property types that we cover. It's usually easier to say what we don't cover. We want to stay away from the unicorn properties, whether it's or special use properties, right? So for example, movie theaters, golf courses, we do not lend on land. The special properties that can only be used as what they are today is really what we're not looking to do. But we could do condo conversions, auto services, convenience stores, retail, funeral homes, healthcare, parking garages, self-storage, which is one of my favorite asset classes, warehouse. Warehouse is also another it's up and came already, but it's even going to come more if you ask me. And our process is very simple. We go ahead with the application. We put together an LOI for the borrower that says, hey, this is what we intend to lend on the property based off the information that was given to us. We'll do a quick credit check up front just to make sure that we're still in line and everything makes sense in the way we priced it. We will then go ahead and start to order the appraisal. We'll do a background check. Environmental, we only do when there's reason to believe that it's needed, whether it be that the property or a property next door maybe operates a business that could create environmental issues, whether it be a laundromat or of some nature. If there is no reason to believe, there's no news that say anything, we're usually not going to require one. But if there's something that says that it could be, then we will. And then once we have the appraisal and all the borrower's docs, we'll then go into the underwriting and review. And then once we have all the file is agreed to fund, we'll then have the insurance, title, and legal team get in touch with each other so they could start to schedule and get us to a celebratory closing. So we do offer a full doc option for this. So if an investor decided that they wanted to provide tax returns for their deal, even if they are not occupying the property, they can get a better rate by doing so. Or we could do Lite-Doc, which is no tax returns, and we could even do no documentation as well. Before I go to the Express Bank rate, I'm going to go back to residential for a moment, to the portfolio loan, which is pretty much the Rental 360 product, except that it allows for multiple assets under one loan. So this will work for single families, multifamilies, meaning 2 to 4 units. We do not portfolio anything 5+ units, condos and townhomes. Now, to qualify for this, they would have to be in the same state. They do have to be under the same entity. And there are some pros that come out of this, right? Now, the pros are, number one is I have a single payment to be made. I don't have to worry about making 5 or 6 or 20 or 50 different payments every month. I could just make one quick payment and I'm done. The next thing is, when originating these files, you're paying a one-time underwriting or underwriting fee, as opposed to paying 5, 6, 7, or 8, or 10, depending on how many properties you're financing. So there is a savings when doing the portfolio as well. Additionally, our portfolio loan is a non-PG loan, which means that in our loan docs, there is going to be no personal guarantee to the investor, as opposed to our single asset loan, which will have a PG in there. The only other thing is, sometimes if you have, let's say, a portfolio where some of the properties are carrying some of the other properties too much, where they're not as, it could work both ways. So if I have, let's say, a property that's not debt servicing well, but then I have 3 or 4 other ones that are debt servicing phenomenally, well, then that one will carry them. It'll actually allow me to get the highest loan amount possible. But if altogether, let's say, they don't debt service well, that sometimes was where we'll look to take some of them out of the portfolio to make sure that we're getting the investor the highest loan to value possible. And that's pretty much it. So it's 2 property minimums. So that means that the loan amount minimum would be 150K. So 75,000 per property. Same options up to 75%. One actually other difference is, for purchases, it would still be a 75% max. So for portfolios, whether you're doing a purchase or refinance, it is going to be a 75% max. And we still offer the 5-1s, 10-1s, 30-year fixed interest only as well. We can lend to foreign nationals as long as they have a social security number and they are allowed to be in the property, in the States for the duration of the loan. And our credit score minimum for this product would be a 660. And you'll notice, by the way, that we put all of our information here. There are some things that have to get updated, which we are working on. They've already been sent over, but we try to keep our website as up to date as possible so that you guys have all the information you need to talk with your borrowers and have good conversations and assist them in getting them to their end goal. Now, our Express Bank Rate program is more for the people that want lower rates when they're buying some commercial properties similar to banks. So this would be a 1 million minimum loan amount up to 15 million. This was good for purchases, refinances, and cash outs for multifamily, light industrial, warehouse, mixed use, office, retail, self-storage. We'll even do mobile home parks. So with this program, they're going to get the benefits that they know that they get from a bank, and they're also going to get the benefit of Express of getting it done quickly and not having to wait in a long queue that the banks usually have. We'll go up to 75% for cash outs, 80% for purchases. Now, when it comes to multifamily, is really where they're going to get the high leverage. For mixed use, office, warehouse, this could actually be updated to 75. And we'll go up to 65 for mobile home park, self-storage, and then 60 for retail and other assets similar to it. Our rates in this program start in 3% plus. Our credit score minimum is a 625. This is for investors and non-owner occupied properties. And we could offer 10-year terms, 10-year fixed with a 30-year amortization. I believe we could also do a 15-year fixed, which I have to double check on. I will confirm. I'll let everybody know in an email after this webinar. And we do require tax returns for this program. It is a global debt service, which means that we're looking at the property's income, we're looking at the investor's income to ensure that they can afford to pay back this loan. This is also a nationwide program, and we look for a minimum debt service of a 1.2 for the multifamily, 1.25 for mixed use, and 1.3 for our retail properties. There are multiple options when it comes to the prepayment penalty. We have a 5-year, a 7-year, and a 10-year option. And obviously the 10-year would get them the best rate. And the 5 would be the highest rate in the options. Buy downs, we can offer them on a case-by-case basis. And these are non-recourse loans for everything 1 million and above. So these are our core programs. This is what Express Capital is capable of doing. So whether it be a residential fix and flip, whether it be ground up construction in the residential space, a mortgage, you want to refinance out of a hard money deal, or just refinance and cash out of a property that you own, or just buy a turnkey property that you're going to rent out. We are also doing now Airbnb properties, so we will fund those. We'll usually look, if the property was operating already as an Airbnb, we'll look at the last 12 months and how they operated, and use 85% of that rent just to account for any possible changes in the market. And we will also look at the fair market rent that the appraiser puts in there for how long the 12-month rent is, just to make sure that, hey, look, this property will debt service one way or the other. I will open up to any questions on programs, because I know I just went over a lot of information. And also to let everyone here know, we are working on, and I should have it prepared by tomorrow morning. Hopefully I'll be sending out an email to everyone that attended that'll have a broker package. It'll be a Google Drive folder that'll have matrices for all of our programs. So you have an idea and can start to quote, soft quote some of your borrowers with rates and information that they need, and such as LTV. I'll show you guys very shortly how we're going to go about submitting files to us, how the process looks, and what other tools are available for you. So Mohammed is asking, can you fund what I have intention to purchase for an Airbnb? So yes, we can do purchases for Airbnb. So if the seller was operating as an Airbnb, we'll look at the trailing 12 to see what that income was. If it was not operating as an Airbnb, then we're just going to go ahead and get the fair market rent, just to ensure that the property debt service is still for that loan. Give you guys a couple more seconds to ask any of the questions that you have before I move on to submissions. My pleasure, Mohammed. So let's talk submissions for a moment. How do you get a scenario to us? What's the best way to do so? So there's a few options. I'm going to go over it real quick. Number one, this is not for you guys. This is for clients to get in touch with us and get their information to us. This is not an application. I would not use this. Can you explain? Yes. So Lynn is asking if we can explain the, I believe she means FMR debt service calculation, which is fair market rent debt service. So what we're looking to do is, and I'm going to dumb this down a little bit. So for example, if my principal, interest, taxes, and insurance payment every month on the property is $1,000, I should be receiving $1,200 a month in rent to meet that 1.2 debt service ratio. Now, what's the qualifying rent that we're looking at? If the property is currently rented, we are going to use that rent amount as the qualifying rent. If the property is not rented and it's vacant, we will use 90% of the fair market rent as the qualifying rent. So back to what we were saying, again, just to reiterate, this is not for brokers. This is for the investors and personal people that want to get in touch with us that we use. So there's two ways that we could go about it. Number one, if you go to the Apply Now page, actually, this will offer you all the different applications. Now, they're all the same application if you click the online, right? So if I click on fix and flip, but I really meant to do a rental mortgage, that's okay. It's going to take you to our portal. The only difference is the information that we give to you on the side here, which is pretty much our guidelines and whatnot, will change, right? So you're going to see the fix and flip information here just to help you out, I guess, while you're walking through it, just to know what our guidelines are, what we can and can't do. Now, once you're going through this, the first question it's going to ask you is if you are a broker, you're going to select yes. You are going to put your email address, name, phone number, company name, and so on. Once you do this the first time, the next time you come into our system and you put in your email address, all of your other information would auto-populate. So you don't have to worry about doing this multiple times over. And if you have a loan officer that you work with, you can select them as well to ensure that they receive your scenario so that they can help you with it and get to you as quickly as possible. We'll go through the application pretty quickly as well, just to make sure that if there's any questions on it, we can help get them answered for you. So you can choose here the type of product that we're looking for, whether it be a multifamily mixed use bridge, whether we're looking to do a fix and flip, portfolio loan, or new construction. All your options are here. We'll go ahead and choose the fix and flip option just to kind of see what that looks like. Where are we in the process? We have the property under contract already. My name is John Smith. Again, if you want to put your email instead of the borrower's, that is okay. We will not reach out to any of the borrowers, and in our broker agreement, it kind of explicitly says that. Eventually, we will need their contact information so that we could send them DocuSigns and information, which you will always be CC'd on to ensure that we don't lose track. Sometimes brokers get busy, and we want to move the deal along and make sure that nothing gets stopped in its tracks because somebody was unable to answer the phone. If there's a co-borrower, you can select that, and it will allow you to enter their information here as well. It'll ask you for their mid FICO. Now you could put a range if you're a little bit unsure, or we could put an exact score if we know the actual score. If we have an entity name already, beautiful. Let us know that. We could set that up. We have the borrower's background. These are the basic questions, just making sure that they're a citizen. There's no, if they're not a citizen, by the way, it'll ask them for their origin and visa status. So you can let us know that they're legally allowed to be there for the next either 12 months or 30 years, depending on the program they're choosing, to make sure that they do qualify. Bankruptcies, we will do people with bankruptcies as long as it's past 4 years. So if they do have one in the last 7 years, just let us know, give us some information on it, and we will work through that. Are there any outstanding judgments, lawsuits, tax liens? Again, I'm sure a lot of this is pretty familiar to you all. If it's not to anybody, please do let me know. I'd be happy to elaborate and go further into it. Felonies, again, same information. Just let us know if there is, and we can let you know right away if that works or not. Does the borrower have fix and flip experience, right? So have we done this before? If the answer is yes, we can put in how many properties they've completed in the last couple of years. If they stepped out of the game for a really long time, we will look at their lifetime experience as well. It really just depends how long ago it was and if they've done anything recently or how long they've been in the business. You don't have to go about listing the 3 examples of past deals. We will ask for a track record to be filled out by the borrower. However, if it's a very large or extensive project, the renovation budget is very high compared to the purchase price, or just a very big project, it would be very helpful if we had that information so that we know what kind of deals the borrower is accustomed to doing, and we can underwrite that deal a lot quicker. So let's just pass over that. If it's a ground up construction project, obviously we do want to know if they have ground up construction experience, if they plan on using a property manager, any projects in progress, which we will count towards experience sometimes depending on how far along in the project they are. And if they own rental properties, we will use rental properties also as experience. Now, if a borrower has done a BRRRR where they bought, renovated, rented and refinanced the property, we can consider that as a fix and flip experience. You don't have to put in their investment, you can put it under fix and flip. But if they just buy turnkey properties and have that, you can put that down here as well, and we will count that towards their experience. If there's any information you want to share with us regarding the strategy, you can do so here. You can write long notes, short notes, whatever makes it easier for you to convey the information to us. You can put here their liquidity and net worth, terms that they're looking for, right? So here you can fill out kind of what you would like to see back from us. We're always going to do our best to make those work. If we can't, we'll obviously give you a call or call you and let you know what we can do, right? So you can put a desired closing date when the contract has to close by. Is this an investment property? It does not allow you to choose owner occupied because we do not fund owner occupied residential properties. Transaction type, right? Let us know, is it a rate and term? Is it a purchase? Is it a cash out? What kind of purchase, right? So this is a little bit important to us actually, especially when they're wholesale deals, because we do need to collect both the A to B and the B to C contract. If it's an MLS listing, just let us know if you have that information. If not, we'll usually find that out later on. We don't need to know the escrow taxes. We do not escrow taxes and insurance for these fix and flip loans, only for our permanent loans. So we can skip that as well. But if you do know the taxes and insurance, it doesn't help to provide that as well. And this is where you're going to put in the rehab budget, right? So now we're going to put in how much we're purchasing the property for. If the property value is higher than it is today and not similar to the purchase price, you can note that right here in the as is value. Our after repair value, especially for refinances, by the way, we're going to be looking at the property in 2 different forms, right? So we want to know what the investor purchased the property for, and if you invested any money into the property here to date, because we're going to use those 2 numbers to come up with the current as is value. Here you could put in there what kind of down payment we're hoping to get. So whether it be 10%, 20%, or so on and so forth, you can put that into here. How much we need for the construction budget is going to be here, and how much of the budget we're looking to get financed. Now, even if the investor, if let's say they tell you, I don't want any of the money for the construction, I'm going to fund it myself, don't worry, do still let us know what the construction budget will be, as that is going to be important for us to order the appraisal and understand the deal. We have the address for the property, very simple. Type of property that it is, so you can let us know what we're working with, how many units, if it's occupied or not, and is the property currently in a bad situation, is it not, and can we get access to the property? We will, this way we know if we need to do a drive-by appraisal or if we need to do a full-on appraisal. And if there's any other properties that we're looking to cross-collateralize, this is usually only used for our portfolio loans. And if there currently is any revenue coming in, you can notate that over here. That usually helps us a lot when it comes to the multifamily projects. We usually like to see that there is some income coming in where the investor will maybe move people around. That helps making payments and keep the deal afloat while you don't, and not having to come out of pocket for funds and waiting until the whole deal is complete until you start to see a profit or have to, come up with more money. Is there an accepted, is there a contract already? How are we exiting the deal, right? So are we refinancing? Is this going to be an Airbnb? Are we building and selling? You can notate that for us over there. Hopefully the answer to this is always no, because we do not allow, again, for primary owners to purchase property, to finance properties with us. If we're adding square footage, this is very good to know, especially up front, as we have to make, we want to understand what we're doing with the deal, and that'll help understand why the ARV is so high most of the time. Usually we'll see scenarios where like, hey, this doesn't make sense. The property is only 1,500 square feet. How's it going to value is that? And then it comes back, oh, well, no, we're adding another 700 or 1,000 square feet to the property. Let us know that up front. It'll help us and relieve a lot of the back and forth that usually comes about when we don't have enough information. And then you're done, right? If there's anything else you want to let us know, you can push the submit button. Once we get that, we'll have the file and we could send you notes right away through the system, and we could go ahead and send out a term sheet. This will put it right into our in front of the loan officer, where they're able to print out a term sheet 1, 2, 3 and get that deal over to you and get the investor exactly what they need in due time. Any questions so far on the process, or even you could go back on any of the products if anyone has any questions on it. I see Tony wants to know, do we need an LLC to broker loans? You do not need an LLC to broker loans. It's advised to have one, but no, you do not need one. Give it another minute, a few seconds actually, for any other questions to come in. Okay, now I'm actually going to skip one thing and go to tools first, since we're on the website. So if you're, talking with borrowers, you want to, and they're having questions, they want to understand, hey, is this a good deal? Is this not a good deal? And you want to kind of help them through it. We have some resources that you can use. So on our website, if you go to business resources and then you go to deal calculator, we have both a fix and flip calculator and a rental property calculator. So I can go in here and I'll show you right now. I can put in all the information I need. I can put in the purchase price, ARV, the loan amount that I want to apply for, the budget that I plan on spending on the property, how long I'm estimating it to take me to complete the project, what kind of interest rate am I expecting. I could put the point structure in there. Let's say we're a broker, you want to, estimate it at 3, 4, 2, 1. You could change that. If you're in a state with mortgage and transfer tax, you could adjust that. If the property is over $1 million and has a mansion tax, you could adjust that. And at the end of all this, once you input all the information, it'll then give you a full breakdown on what your profit and loss is. It'll give you your total profitability, what your ROI is, what's my cash on cash return, how much money am I going to have in the deal at the time of the purchase, how much money am I going to have in the deal 6 months after making payments. And it's doing 6 months because I chose 6 months as my time to flip, right? So if I chose 12, it'll adjust that to the 12. It didn't do that, but it should adjust it based on the 12 months, how long it takes me to flip the property. It'll also show you, if you put in the tax information, it'll include that as well. It can include broker fees and everything else. So you can put together a full pro forma for the borrower and help them understand, hey, how well is my deal going to be profitable for me, and how profitable will it be? On the rental property, same thing. You could put in and if it's a multifamily, by the way, and I choose that it's more units, it'll then allow me to put more unit accounts in here. Now, we don't make this active for 5+ units because it's a different underwriting for those types of properties. There's usually more expenses that come into play that are property specific. So we use this more for the 1 to 4 space. Anything in the multifamily, you should have some sort of spreadsheets. And if you need assistance with that, you could reach out to me and I'll be happy to share some tools that you can use as well to price out multifamily deals. But you put in your insurance taxes, HOA fees, what you plan on having as what you foresee as vacancies. And this will also give you a PDF, by the way. So once you're done, you can click here. It'll ask you for your name, phone number, email address, and you can send yourself a report that'll have all the information, which will include the ROIs, the how much it's taking off for each item, what the cash flow will be, the cap rate, cash on cash return, and even your debt service coverage ratio. This way you can understand the deal at a very high level and talk with confidence to your borrowers. To go into a little bit more tools that we have, if you go to the broker resources, we have a whole bunch of flyers that you can download and brand for yourself and put your information on that you can then go ahead and share for advertising. This is just the flyers that we've accumulated over time. We look to put it together for you guys to give you some resources to use. Additionally, on our forms area on our page, we have all documents that you should ever need to work through an entire loan. So if you go, let's say if I'm doing a commercial bridge, I go here, I have the application right here. It'll tell me what documentation I should collect from the borrower. And even, for example, a rent roll, let's say, if I click that, it'll then open up a template that I can use to fill out a rent roll. Fix and flips, it has the online app, the paper app. You could have you could download the track record template if you want to collect that up front from the borrower. This way it doesn't have to come through from processing, so be it. Portfolios. So portfolios are actually done on a template. It's an Excel sheet. I don't know if you see it when it just opened up on Excel on my screen or not. But it's pretty much there's a lot of information that has to come in there. So we pretty much ask that we put it on the spreadsheet. You can have the investor help you out with that, putting it together. If they have their own spreadsheet that has all the information that we need, we can go ahead and just move them around and make sure that we have the full file together. Even the mortgages, I have all my docs here. I have an online application, I have a commercial online application. And if I just want to use a paper document, right? So not everybody's tech savvy. We can use a paper application to fill out and send back to us, which everyone will also have in their Google Drive documents. You have in here, like I said, W-9s, personal financial statements. These are just general forms that you might want or need throughout your career. And even credit authorization forms. And then lastly, I'll just show you guys how to sign up as a broker with Express Capital from now. You would go to the broker referral program, click on that broker referral program, and you're going to click the get started here. And just like that, it'll ask you for your email address, and it'll then email you the broker agreement, which you could then go ahead and fill out in a couple moments. There will be a W-9 in there as well. And you should be all set and ready to go. Once we get those is when we usually will also send out a copy of the Google Drive that I mentioned to you, the broker documents that you'll need in order to originate your own deals. Now, the last thing I want to show you guys is as far as processes, how to follow through with the deal. So now you submitted the file to us. We gave terms, the investor liked the terms, they decided to move forward with it, and now we're processing the file. The first thing that's going to happen is they're going to get an email from one of our processors that are going to reach out, and even a phone call letting them know, hey, thank you so much. I'm here, I'm going to be your processor, working through your file with you. Here's what we need to process your file and to please get it over to us. They'll also include in that email a link to what's called Pro Deal, which is how we keep through and follow through with all of our files, right? So let's just look to an empty file for a moment, right? So if I go here, it'll automatically have for me anything that the borrower has to fill out. It'll have in there a template which they can use to fill out. So for example, if I go to the credit authorization, now I don't want to open that. This one already has it in there. I apologize. Let me go to a blank one. Unfortunately, everyone sent everything in already. But if I went to one, let's just say where there was an empty, it would then have the template for them so that they can just go on it, sign it straight from ProDeal, fill it out, and it'll then upload for us, right? So once they go in here, they can upload their files. You could upload the files for them. If they're not tech savvy and this doesn't work for them, that's okay. Just let us know. We'll have a simple email. We'll upload it for them, but we'll upload the docs for them. We'll still do it so that you guys have access to this and can see how the file is coming along. If there's anything needed that we see is missing, we could reach out to them. You can see once we approve a certain document, once we've actually had a chance to review it and know exactly what's going on with your files. And it'll even go all the way to the closing part where we have title docs. We'll let you know once we receive, the title commitments, wiring instructions, tax certificates, all that fun stuff. So you can see everything in one place. You have access to the documents. You could download them for yourself to keep for safekeeping, or you could leave them in ProDeal for safekeeping. That is totally up to you. To answer Carlos's questions, yes, you can use our website. That's what it's there for. So by all means, feel free to use our broker resources forms area, use our deal calculators. If you're interested in reading what are they called? Blogs and whatnot. We also we write blogs every so often, so you guys can check in on that just to see what we're seeing in the market, what we are predicting, what we are seeing people doing that are working, what's not working. Absolutely. Carlos, I'm not sure what you mean by comp. Okay. I'll just go over before we finish this webinar. I'll just go over a couple of quick things that we can use to talk with our borrowers, why people would want to work with us. Number one is we offer a one-stop shop for all their deals, right? So if I'm an investor for right now, let's say I'm doing 1 to 4s, eventually I want to get into the multifamily space. I don't have to worry about creating new relationships, starting fresh and moving on from there. I can go ahead and work with the same lender and do more deals and increase my portfolio. We offer unlimited financing. We offer high leverage. We are fast, able to speak with our borrowers is a huge thing, right? So even when it comes from brokers, we will get on the phone with the borrower and talk through questions, help us understand the deal sometimes, help them understand the processes so that they have a really good experience, which makes their experience with you even better. And that'll get you more deals because they're happy with the way that you, with who you referred the deal to and where you placed the deal. We offer, as I mentioned before, free extensions. So again, very common sense based. We like to underwrite our deals based off what makes sense, what the borrower and the deal deserves. We offer as dispersed interest, back office support, and like I said before, also no prepayment penalties. To answer Lynn's question, can you get a broker fee for your own deals, kind of like a real estate agent can get commission on properties they purchase as an investment? So it's funny, I actually had that conversation with someone today. By charging yourself a fee, you're charging yourself an extra cost that would have never been there. So it's almost a little bit pointless, right? So if I charge myself $100 and I get $100 at the closing, I didn't really do anything for the deal. Potentially, it could maybe help with taxes. I don't know. That's something to ask your accountant. But if you want to charge yourself, you can definitely charge yourself. And I'm going to leave this open, guys, for another couple minutes for anyone that has any questions on anything I covered. I think we covered a whole lot today, so there's definitely a lot to think about. Like I said, we will be sharing with you guys more the matrices, pricing sheets, and other tools in the Google Drive. I should have it out to you guys hopefully tomorrow morning, the latest tomorrow night. And I'll stay for another couple of minutes just to answer any questions that you guys might have. I think Renelle just raised her hand, so let's let her talk. Hey, Renelle, how you doing? I think you're muted.
Unmute. Go ahead. Sorry.
All good. How you doing today?
I'm well. I'm glad I was able to participate. I was late a little bit, so I missed the first part. But so far, I like what I've been hearing.
Sure. Did you have a question?
No. Oh, I pressed the wrong button by mistake. No, I didn't have a question. No.
Okay, not a problem. Well, I'm glad you were able to make it. So Love is asking, are borrowers directly connected to us for the lifetime for the relationship with ECF? Will we get paid on broker commissions? Yes, right. Once you send the borrower to us, their file will always have your information as the broker on their file, and you will always get paid for that. We will always reach out if the borrower decides to reach out to us directly. We would obviously let you know and say, hey, by the way, we just received the submission from the borrower. Here's the information. Make sure to give them a call. Let them know that you're going to be assisting them as well on this file. Additionally, guys, I highly recommend making those relationships. Right, be part of the file as much as we're gonna. Maybe you might conference us in just to help work through a certain question or such. Build that relationship with them. Let them know that you're the one that's working on the file. Let them always come to you. That's always best. But yes, we will never ever take a borrower that you have brought to us and fund them without you knowing. To answer John's question, yes, you would make your money by adding a fee for yourself, correct? That's exactly right. And Love, thank you so much for participating. I'm always happy to share more information and you know, whatever I can do to help. So Paul apparently asked a question. Let's go back for a second. Compensation. Oh, so maybe I did miss that then. So yeah, so compensation is created by adding points to the deal, right? When we are working with brokers, we understand you guys have to eat, and we will always make room in there for you. That's something that we can always communicate with. You tell us what you're looking to charge the borrower, and we will add that to the file for you. Whether you want to be on the file as a part of hours where we pay you out, or you could just be listed as a broker and get paid out on the HUD. That is entirely up to you. I think Paresh has a question. Paresh, how you doing today?
Sorry, I entered late. So I was just on your website filling out this form. So we have to put today's date on that, right?
Yeah, that's fine.
Right. And then, yeah, I mean, so I missed the webinar. So is there any replay of this?
I did record it. So I will be able to share a copy with that. If you want a copy of the recording, just shoot me an email. I'll put my email address right now in the chat for everybody. So it's Max at Express Capital Financing. Whoa. Capitalfinancing.com. There we go.
I didn't see the email.
Oh, it went to the panelist. I'm sorry. Give me a second.
Okay.
So, Love, as I just mentioned, you can email me for a copy of the recording, and I would be happy to share it. So Mohammed's asking, would you have any more broker training anytime soon? I'm in Philadelphia. I'm actually working with John as a borrower. He closed one of my deals in the last month. He's closing another one in the next week. I'm pretty much interested in your brokerage programs. Yes, I'm going to be looking to do this as often as once a month, hopefully, so that we can keep bringing more information to you guys, keep giving you guys updates on how our programs are operating and how you can make money with us at Express Capital Financing. Carlos, if you need my cell, you could just email me. I'll share that information with you. And I'd be, like I said, if anyone has any any specific questions, feel free to reach out to us. You could also reach us at, for the fastest response, because I can't answer everybody all in one shot, would be info@expresscapitalfinancing.com. And what will happen is you'll get assigned to a loan officer who will be your direct account manager that'll help you through all your deals, be able to talk with you through them, and build the relationship with them so you can get more deals funded, understand our appetites and what we look for. Well, guys, I appreciate all of you being here tonight. I hope I gave you guys good information. I hope it was helpful and that you were able to learn something from all this tonight. I hope we see some deals from a lot of you and we're able to get them funded for you. And till next time, I look forward to seeing you all next time, and have a wonderful rest of your night.